Welcome, ladies and gentlemen, to Commodity TV and the new edition of our virtual online interview series. And today we have Taj Singh here, the CEO of Discovery Silver. And of course, we want to get an update of this fantastic company. Hey, Taj, good morning to Toronto. How are you doing?
Very good to be here, Johan. Doing very well. Thank you.
Super. Yeah, great to see you in such good shape. That's perfect. And let's go in medias res. You guys had on the 22nd of June, I think, an update, a drill update for your bulk tonnage. And honestly, I was really impressed about the widths you showed here, like 66 meters, 143 meters, 86 meters, 82 meters, and then also with beautiful grades like 120, 258 grams silver equivalent, 171 grams. So this is fantastic. I think for bulk tonnage, this is quite outstanding.
Yeah, listen, those results that you're talking about, the last bulk tonnage results we put out were honestly, as a batch, one of the best results we've had as a batch. So there's probably at least 8, probably 10 or 12 headline holes. Each of them could have been a headline hole, we think, because of the combination, like you said, of width and grade. There was hundreds of meters, over 100 meters, 60 meters, but good grade, 100 gram per ton silver equivalent, more than that. So I think it's a time when maybe the market's gotten slow, but I don't think people really realized how powerful and impactful those results were. And it really, because of and because these holes were drilled in areas where there were significant gaps in the previous drilling, they're confirming the continuity of the higher grade mineralization at depth, especially it was in the south corridor, focused on the south corridor. And on a consistent basis, we've encountered these excellent grades over broad widths. And I think what it's really pointing to and continuing to add to the fact that Cordero is emerging as one of the few multi-generational mines in silver space because of the size of it, the continuity of it. So we were very happy with the results.
Fantastic. So that means to me that really, something really good is going on here, because this is not like the first drill holes. You have already drilled 100,000 of meters in that whole thing. Then let's talk straightforward about the vein sorts, because on May 26th you had a great news release out for the Josephine vein and the Todos Santos vein, and I mean that was like 4.1 meters, averaging 1,043 grams silver equivalent, and then let's say 1.2, 1.3 meters with 1,700 grams silver equivalent. That is fantastic. So what is the thing behind those results then? What does it show you? Again, those fantastic results.
In some instances with the Josephine vein trend, we're going to be now, we've defined the vein so well, and there's some very wide widths, despite there being maybe there's a 1 meter, 2 meter, 3 meter hit, but there's mineralization outside of that. That's much, much wider and still very, very high grade. So in some parts, the open pit, the high grade open pit will be expanded. In some instances, as the Todos Santos vein trend you talked about, again, we're going to be able to now look at that as almost a separate operation, an underground mine that will supplement the open pit feed. And at the Todos Santos vein trend, we've continued to expand the drill confirmed strike extent. We've step out holes 250 meters, 300 meters. We continue to hit, we're stepping out. So, we're going to continue to systematically test the veins as part of our drilling, which we've continued. We've already started the phase 2 drilling, and that will then feed into the PFS. But, there's already over 5 kilometers of strike that's been identified, well over 5 kilometers. We're down to 350, 400 meters on most of these veins, in some cases beyond that. And again, the success rate, if you look at some of the graphics from our press releases, the success rate on what we've been hitting on the veins, and even the drill density of the veins is coming out very nicely. Pictures coming together a lot better.
Super, yeah, pictures coming together. I really like that, because I saw also that you want to bring out, that I'm getting this correct here, a resource update in Q3, which we are already in Q3 this year, and then a PEA already in the fourth quarter. That is quite fast. I mean, you have a lot of data to compile.
Yes, so this new resource is very exciting. It's a pretty important catalyst, very important catalyst for the story. It'll be the first resource since we've taken over as the operators of the project. But what I really, what I'm really excited about is that the deposit quality has improved so much since we've been drilling. We've drilled almost another 100,000 meters on the property since we've drilled, since we've taken over. And there's a lot of areas from before we took over that were undrilled. And you can see from a lot of, again, like our graphics, all these areas being filled up with high grade getting filled up. So the new study, the new resource, sorry, I should say, is not only a new way of looking at things, but there's a huge amount of additional data being added. So you're de-risking the project substantially. So we've almost doubled the number of holes in the resource versus the previous study. We've re-logged every single old hole, almost 300 old holes, according to our geological interpretation of the deposit. So the resource is going to be a lot more robust. Lithology and structure will be used to define the resource domains, which is the first time that's happening. So prior to resource estimation, we're going to be using lithology and structure to define the resource domains. Previously, they were using an unconstrained assay cutoff approach, so that should really de-risk the resource. And then separately, we'll also be releasing MET results, metallurgical results in Q3 or Q4. And a lot of MET work was done previously, which showed a clean, simple flow sheet, but we've de-risked this further. And then we really believe we've carried out the MET testing to a PFS level. And then to sum up our approach on the differences, we really are using a more disciplined approach, focused on capital intensity, and we think the project has been heavily de-risked over the past year and a half since we've taken over. And the data set across many areas is much larger and robust.
Great. Talking about the PEA, I'm not sure if you can say already a little bit on that, but what calculation basis are you using, for example? And I can imagine also that you are using very actual cost basis, like for, let's say, equipment, for energy and stuff like this. So it will be like something really fully up to date, and maybe something also with really actual, or let's say actual prices minus some discounts, right?
Yes, exactly. So one of the very important principles of how we want to move this project ahead is to be very realistic and very kind of a typical PEA. I hate to say it, is a little bit more arm wavy. Oh, this is this, and the costs are much less than this. We want to be just very realistic, because eventually when the PFS comes out, you're going to have to be realistic. And people can do their own work. They know what's realistic. Yeah. We're using very, very, very realistic, up-to-date costs. The lead of the PEA will be done by Ausenco. Ausenco is very busy building many projects. They're working on Silvercrest's project, building it in Mexico. They're working on Argonaut's project, Magino building that. They're working on Artemis Gold's project in Blackwater. They're very busy. But the key thing is this PEA is being undertaken by an industry-leading team and have specialists across all key mining disciplines. And we want to deliver a product that it's coming out as a PEA. We've said it time and time again, but we really believe it's a PFS level quality. The objective is to establish Cordero as one of the largest producing and longest mine life primary silver mines in the world, with costs in the bottom half of the industry cost curve. And I think if we can show that, it is going to be definitely considered a tier one asset, silver asset. And just to close off, we've got I mentioned before, but the data set, the drilling and metallurgical data set will be very, very strong and heavily de-risked. So that's really going to be the focus of the PEA.
Mm-hmm. Aren't you in fear to become let's say a tier one takeover target then?
Yeah, listen, we're not going to speculate now. That we've got our heads down, focused on delivering a great product, great resource, and great PEA. The year is going to be very busy, lots of news every 3-4 weeks, drill results. We still have 4 rigs going on. We're probably planning to take that to 5 or 6. So that will then feed into the PFS. And no, we're just really busy, continuing to improve the project and optimize the project.
Super. Final question. What are, let's say, your major catalysts then for the rest of the year? Where do you see them?
Perfect. I touched on it in the previous question, but yeah, drill results every 3-4 weeks. Metallurgical results should come out in Q3 and the brand new resource, so this quarter coming up. And then the big catalyst for the year is the brand new PEA, which I talked about, which will outline the economics of the project. And also in the early fall, very important to announce, we will release our inaugural ESG report, which will outline all of our initiatives in the sustainability area, which we've been putting a huge focus on. And as a developer, you don't usually see development companies have an ESG report, but producers have to do it. But we really, we wanted to be ahead of the curve. We're already doing many of the initiatives and carrying them out, so we really want to show that we're putting a focus on that. So that will be coming out in the fall as well.
Super. So that would mean we maybe see then $5 share price by Christmas.
Hopefully, let's see. Listen, maybe it's a little quiet in the summer, but listen, we know that there's lots of value to be shown here, and we're going to keep working and showing that.
Absolutely. And you have the cash to do that until, let's say, also feasibility study, right?
We're actually financed. We've got close to $85 million in the bank, no debt, as you know. That will take us to a construction decision, and potentially, by the way we model it, with some money coming in from warrants, etc., we should probably have the order of $65 to $75 million at a construction decision in the bank, which represents a pretty significant portion of the capital needed for the build, which we're targeting. So, maybe 25–30% of the capex for the build will already have that. So that really puts us in a good position.
Perfect. There's nothing more to add, I would say. Taj, thank you very much. It was a great update, and I would say you guys are 150% on the right path.
Thank you so much, Johan, for the support, and I hope to see you again soon.
Yeah, hopefully too. That's right. Thanks, Taj. Yeah, ladies and gentlemen, that was Taj Singh, the CEO of Discovery Silver, and you heard it. I mean, with $85 million in the bank, and Taj said it, maybe 65 to 75 million. Then when it comes to a construction decision, this is like a home run to me, and it is definitely one of the largest, or maybe even the largest, high-quality silver project in the world. And I think the team around Taj did a sensational job. And honestly, the stock is really too cheap, and you heard a lot of catalysts are coming within the next 6 months, and I can imagine that we will see some very good numbers. First of all, resource estimates, a new one, but also with the PEA, which might be already on the PFS level in most parts, and this is exactly what we want to see and how it should be. So I would suggest you really check out Discovery Silver. It's a great company. I'm a shareholder of the company, and I will be longer-term shareholder here. And I could imagine it might be next year a takeover target. And don't forget, silver is hot, and the company is hot. Thanks for watching us, and bye-bye from Switzerland.